Hi, I want to talk to you for a few minutes about a vital component of the Affordable Care Act, and that's the Small Employer Health Options Program, better known as the SHOP Benefit Exchange. This is one of two exchanges states will be launching on January 1st, 2014, and this one will serve small businesses with employees between 1 and 100 people initially, although there are options that it could expand to larger groups later on. To understand how the SHOP exchange is going to change the way the small group market buys insurance, let's look at the way the market works now. You've got employers who want to offer benefits to their employees and carriers who have small group products. And someone at that group, the HR manager or the owner, makes a determination as to which carrier and which plan, or maybe a couple of plans, they're going to make available to their employees. And all the employees then pick that one or two plans from that one carrier that's being offered. Well, in 2014, the exchange is going to be in the middle of that transaction. The exchange will offer a menu of products, but that menu of products will be grouped into 4 tiers called the precious metal plans: the bronze, silver, gold, and platinum. Now, the bronze plan will pay 60% of the cost of covered benefits, and the platinum 90%. So there are various tiers of coverage available at various price points. There's also a catastrophic plan that will be marketed only to employees who are under age 30. So the employer still has a couple of options here, a couple of decisions to make. One is, does he want to limit the plans available to one of those precious metal tiers, in this case silver? And also, how much will he contribute toward the cost of the employee coverage? With those two items in mind, the employees are sent to the exchange where they'll use the plan selection tools and the educational materials available on the web portal to narrow down that menu of options to the one plan that best fits the needs of that particular employee and his family. And the actual enrollment into the plan will be done right there at the exchange web portal. Once the enrollments are done, the exchange sends the enrollments to the carrier selected by the employees, and they begin to bill the employer. Now, just because the employees have picked a lot of different plans from many carriers doesn't mean there'll be a lot of bills coming to the group. In fact, the exchange will consolidate all the selections made by the employees onto one list billing, and the employer will make one payment back to the exchange. The exchange then has the responsibility of dividing up that payment to make sure the carrier selected by each employee gets their portion of the premium. There's also a tax credit mechanism that's between the employer and the IRS, and a couple of other vital functions of the exchange. One is called risk adjustment. And what this does is it kind of flattens out the risk profile, so no carrier ends up with an undue burden of high risk in their enrollment population. And, of course, all this has to stay in sync, so there's reconciliation to make sure all the right people are with the right carrier and to make sure all the payments balance right down to the penny. And that, in a nutshell, is how the SHOP exchange works.